What's going on YouTube? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Tonight's video is all about the CPI data, how it's been a big lie, and how it could affect crypto in the major markets tomorrow morning when January's CPI data comes out. So stay tuned. There's a ton to go over. You don't want to miss it. Guys, we know the drill. I'm not a financial advisor. This is not financial advice. I simply share technical analysis and some news. You use it as you see fit, but remember, you manage your own money, you manage your own risk. You guys might notice right now that I'm using the Brave browser. Just a brief minute to talk about the Brave browser. It is phenomenal. It is safe, secure. It tells you how many trackers and ads were blocked, how much bandwidth was saved, how much time was saved. It is a very fast browser, and you get paid in crypto for using it. It is a blockchain-based browser. You get paid in basic attention token. So guys, give it a shot. You won't regret it. Getting into the news. So this is from Reuters. Revisions show that U.S. consumer prices a bit firmer than previously reported. And I think everybody knew that. I think everybody who's had to buy groceries, who's had to buy tires, who's had to have home repairs done or anything knows that inflation is still high. All these CPI data that has come out, all these reports that come out, and it's down, it's below target, it's below target. 4 out of the past 5 months have been revised up. So that's quietly being revised, quietly being changed to show closer to actuality when even the CPI in general doesn't show actual inflation. It's not as accurate as it should be, because in reality, inflation is probably closer to 15 to 20%. It's not 6%. And I think everybody knows that. The really interesting part that could be really detrimental for tomorrow is that data for Tuesday was likely already showing the climb to 0.4% month over month on core. We were at negative 0.1 last month, got revised from negative 0.1 to 0.1, and now there was already the thought process that CPI was going to climb again this month and we would get an upward month. But that survey was conducted before the revision and the updates, and you've got some economists that think that since this has been raised and all these revisions have happened, that the estimate should be even higher. So a higher than expected CPI tomorrow will likely mean a flash dump in the markets. I'm talking 2 or 3% down in the NASDAQ, 2 or 3% down in the SPX if it's higher than anticipated. And that will likely cause a, not severe, but a legitimately sized crash or drop in Bitcoin and crypto markets in general. You're thinking 2 to 3 in the NASDAQ, maybe 5% for Bitcoin, and then substantially more for altcoins, because altcoins tend to slingshot in bigger moves than Bitcoin does. It's just the way altcoins work. It just always has been that way. What I want to talk about really quickly with Bitcoin and how it could be affected tomorrow and why it won't be that bad. Here, we're going to look first the CME futures. CME futures, there's a gap. Gaps tend to fill. It's not a guarantee. It's not always, but typically gaps will fill. So we're looking at price to get back into this range down to about 19.6 to fill that gap. Or if you go down to the wick, like 19.9, 20,000 even would be enough to say that the gap gets filled. So in that 20,000 range, between 19.5 to 20,000 would fill that gap. Now we take a look at our, USD, Bitcoin and USD chart. We see in the daily, we've broken out that big falling wedge. This thing's been in a falling wedge for over a year. And it broke out and we made a new high. Now, we made a higher high on the actual daily time frame. Unless you don't count either one of these two, which I would be inclined to say this was a lower high at that point in time. So this makes it a higher high. So we have essentially broken structure. As long as we come back and make a higher low, the structure is broken and we can start either being in an accumulation phase here for a while or getting into a bullish and uptrend. But the really cool thing is that the CME futures gap is right where a retest of the falling wedge would be. So there's a good potential to see a bounce there. If you see a long wick down to that zone and a buyback and you get a a hammer type formation, that is a great bullish sign that there has been buying pressure to flip this to be a support. If it comes down near it and then there's a doji the next day and a strong buy the following, that 3-day pattern is a morning star. That's another great bullish transitional pattern that could show that there's going to be bullish momentum moving forward. So I don't want to blind buy this area because it could be a fake break and just continue to fall through and retest this low here. I mean, at that point we'd be testing 13 to 14,000, and there's a lot of people who called for 12,000 bottom. Potentially could be there. I don't see it. I think the bottom is already in my opinion, but you know, everyone's got their own opinions. I think the bottom is in. I think we see a support in this area between 19.5 and 20,500 in this area, and then we get a bounce off. But I need to see a reversal structure. I need to see a hammer. I need to see a pin bar. I need to see a morning star or a 3-line strike, something big on the daily chart to show me that that reversal is coming. So with that being said, guys, that's the video. I hope you enjoyed. Please be careful. Please be careful. If you have open positions now, think about closing them. Think about just shutting it down and waiting to see what happens with CPI tomorrow, because it could wreck you. It can make or break. The volatility is going to be too strong. There's going to be too much. It's better to not be in the market when the volatility is like that. So guys, not financial advice. I'm just saying I'm out of the markets for this move, or I'm out of trades for this move. So as always, guys, I hope you enjoyed. Until next time, peace.